All right, so let's dive right into things. It's a brand new week, and as always, the markets are keeping us on our toes. You wanted to get a handle on interest rates, what happens when the Fed starts fiddling with them. Well, we'll definitely unpack that, but first, let's catch a glimpse of today's market action. We're seeing the S&P 500 and the Dow both hitting those record highs today, which, is definitely something to keep an eye on, especially for those long-term investors out there.
It is encouraging to see that upward movement. Those record highs often translate to a sense of optimism about the overall economy.
Right. And it seems like energy and communication services are the sectors really driving that surge. But what about the global picture? Asian markets seem a bit all over the place, showing those mixed results today, while over in Europe, things are looking pretty good. Those markets are generally up.
It's important to remember that we're not operating in a vacuum here. What happens in those European and Asian markets can have a ripple effect on the U.S. economy.
Absolutely. And I can't forget about the US dollar. It's been gaining some serious muscle against other currencies lately, which, as we know, can impact everything from those imported goods to, well, how much that European vacation is going to set you back.
Precisely. It's all interconnected.
Okay, I know. I just threw a lot of numbers and trends your way. Maybe we can bring in our expert to help us break down what's really driving these market moves. What do you say?
I'd be happy to provide some context. Let's unpack this a bit further.
Perfect. You mentioned wanting to dig a little deeper into those economic indicators, and I actually stumbled upon this article that breaks down one of the big ones, the S&P Flash Composite PMI.
Ah, yes, the PMI.
It can be a bit of a mouthful, I know.
It can sound a bit like alphabet soup, but it can tell us a lot.
I like how the article described it. They called it a health checkup for the economy.
It's a good analogy.
Right. Basically, it's a way to take the temperature of businesses. Are they feeling optimistic? Or are they, a little unsure about what's coming down the road?
It's all about gauging sentiment. The PMI looks at things like new orders, production levels, employment, even supplier deliveries.
It really gives us a broad view, doesn't it? So what's this latest PMI telling us?
Well, the overall reading came in at 54.4.
Okay, so on the surface,
On the surface, that seems positive because it's above that crucial 50 mark.
above 50 is good, right?
Yeah.
That's what we want to see.
Generally speaking, yes.
Yeah.
A reading above 50 typically signals expansion in the economy. But,
There's always a but, isn't there?
right, when we dig a little deeper, we see services are doing quite well, coming in at 55.4. Manufacturing, however,
I was wondering where you were going with that.
that took a bit of a dip, down to 47.
Okay, so a little bit of a mixed bag then. What does this tell us about the whole soft landing everyone's been talking about?
That's the million-dollar question.
Mm.
This mixed PMI reading does suggest that the economy is still expanding, just at a slower pace, especially in that manufacturing sector.
I see.
So it could support that soft landing scenario where inflation cools down without a severe recession. But it's not a guarantee by any means. We need to see what happens next.
So keep a close eye on those future PMI readings. Make sure that slowdown is temporary.
Exactly. It's like we said, the PMI is just one piece of the puzzle, but it's a valuable tool for understanding the economic weather, so to speak.
I like that. The economic weather. Now, speaking of uncertainty, this next article about interest rates, it really caught my eye. This article dives into something I think a lot of folks are wondering about right now, and I know you are too, what happens in the markets when interest rates fall. With all the chatter about the Fed maybe cutting rates, it's definitely top of mind for me. What's your take on all this?
Well, that's a question with a bit of a complex answer, honestly.
Yeah, I figured it wasn't so cut and dry.
Right, not quite. Historically, though, we have seen the stock market perform well in the year following those rate-cutting cycles from the Fed. But
There's a but coming, isn't there?
there is. Like most things in economics, it's not as simple as just cause and effect.
So it's not just as easy as saying rate cuts equal happy markets.
I wish it were that easy. While those lower interest rates can make borrowing cheaper for companies, which can then lead to growth and maybe even higher stock prices,
Mm.
there are other things that really come into play.
I see. It's not just one thing. What would you say is the most important factor then?
Economic growth, without a doubt.
Okay, so you're saying the overall health of the economy really matters more than what the Fed does.
In a way, yes. If the economy is already in a good place, Or if it gets a boost from those lower rates, well, then companies tend to do well, and their stock prices usually reflect that. But
Yeah.
if the economy is struggling, even those lower interest rates might not be enough to turn things around.
So it's like trying to give a plant more water when the real problem is the soil.
Exactly.
Got it. Are there any times in the past that really highlight this point?
Absolutely. Think about the dot-com bubble back in the late 90s, or even the 2008 financial crisis,
Those were definitely wild times.
to say the least. And in both cases, the Fed did cut rates to try and stimulate the economy. But those cuts alone, they couldn't overcome the bigger issues at hand.
That's a good point. So what's the bottom line here for investors who are trying to make sense of this whole interest rate puzzle?
I'd say it's crucial to view those potential rate cuts with cautious optimism. Don't just assume that rate cuts automatically mean a bull market is right around the corner. Instead, really focus on understanding the bigger economic picture.
So look beyond just the headline.
Precisely. Are businesses feeling confident about the future? Are people still spending money? Those are the kinds of questions that will give you a much clearer picture of what might be coming down the road.
That's really insightful. Knowledge is power, right? Speaking of which, I stumbled across this headline earlier. Remember how we talked about those global impacts earlier? Well, it looks like the UAE is making a play to be a major hub for AI investment. Apparently, big players like TSMC and Samsung are even thinking about setting up shop there.
Wow, that's huge. The whole landscape for AI is changing so rapidly, and for the UAE to step into the ring like that, it could be a really big deal.
Definitely something to keep our eyes on. Well, that about wraps things up for today's deep dive. We covered a ton: record highs, economic indicators, interest rate mysteries.
And let's not forget about the UAE potentially becoming a major player in the AI world.
It's a lot to digest, but hopefully it helps you feel a little more informed and ready to navigate whatever the markets throw our way next. Remember, stay curious, and we'll see you in the next one.